morning, good afternoon, and good evening, depending on when you're watching us. It's CK Risanian again, coming with another new concept of taxation, called capital gains tax, CGT. So we want to look at a scenario where a taxpayer buys an asset and later sells it at a profit or at a loss. Now, when you buy, for example, land is a non-current asset that is non-depreciable. So if you buy it, let's assume at 30 millions, and then after like a year, you sell it at, let's assume, 100 millions. It means that you have made a profit depending on the difference between the disposal proceeds and the cost of the asset. So now, the tax regime of Uganda says that you should get the gain on disposal and subject it to 30% until 30% of the gain on disposal that you should pay as tax to your arrival. So today we want to look at a certain scenario specifically about capital gains tax. Now we have an example here that is talking about the disposal of a building. Now we have an example here. Let us go through it very fast and then we look for its solution. Charles Kaketo is a Congolese national who has been living in Uganda since 2015. In 2020, Charles Kaketo acquired a commercial plot of land in Kawempe, a suburb of Kampala, at shillings 1.2 billion. Process and transfer the title, Charles Kaketo made the following additional costs. Now, here they are giving us figures in millions. Surveyor's fee 2.3 millions, legal fees 4.4 millions, and land title processing 12 millions, stamp duty 1% of the cost, which is 1.2 millions. Now, in the same year, Charles Kaketo constructed an apartment on the land with the plan to earn rental income. The building was completed in July 2014 at a total cost of 750 millions. Charles Kaketo decided to return to Congo and dispose it off the building to his brother Moise at 2.3 billion. So now this scenario is giving us transactions that happened in the hands of Kaketo. They are telling us that Kaketo was a Congolese. He came to Uganda and bought land and later had to think of developing it by building apartments, and they're giving us all the details and the costs that he incurred. Now, when you look at the scenario here, but before we look at the scenario, we go back to the scenario. Let us look at the required. We are required to advise Kaketo on the tax implications of this transaction. For tax purposes, what happens? Now, being in accordance with the Income Tax Act, explain the circumstances under which a taxpayer is treated as having disposed of an asset. So when do we treat a taxpayer as having disposed of an asset? Then two circumstances under which no gain or loss on disposal of an asset is taken into account when determining the chargeable income. So we shall also go through these conditions or these circumstances. Then see, in accordance with TPCA, Tax Procedures Code Act, explain the meaning of tax agent and the circumstances under which the committee may conceive the registration of a tax agent. So now, what is a tax agent? You have been hearing some people, most of us saying, this one is a domestic tax agent, this is a customs tax agent. So what do we mean when we talk of a tax agent? Then two, circumstances under which a committee may cancel. So I think that is for you to research, but let us first compute this problem. So now they are telling us that Kaketo bought land at 1.2 billion. Let us highlight this here on such that we can get it right. But to process the transfer of the title, he incurred more costs highlighted here. Surveyor's fee, legal fees, land processing fee, stamp duty. So now the question is, how can you get the cost of land itself? They are telling us that after buying land, he constructed an apartment on the same land, and this apartment costed him 750 million. So after constructing, for they are telling us that in July 2024, it is when the building was completed. So in 2025, after constructing, he decided to return to Congo and disposed of this building to his brother Moise at an amount equivalent to 23 billion. Yeah. So the question is, how can we advise Charles Kaketo on the tax implications of this transaction? So there is an element of capital gains here. Because if he bought land and developed it and later sold it, then there is an element of gain on disposal or loss on disposal that we should look for. Then after we tax it at 30%. Let us look at all the costs. We have seen that the cost of land was 1.2 billion. Here we saw it here. Then, but on top of that, he incurred surveyor's fee at 2.3 million. Here. Then if you take this side, then legal fees. He paid lawyers 4.4 million. Then he paid money for land title processing, 12 million. This figure here. Then he incurred the stamp duty. I think I will have a session explaining about stamp duty, a full session, such that you can really understand what it means. Stamp duty of 1%. Then the building itself, of course, they are telling us that he built and he developed the land, he built apartments on the same land, and it was built at a total cost of 750 million. So now, if we total up all the costs, we shall get the cost of property. And the previous videos, I told you about property. Property means land and the buildings. So now, when you get the cost of land plus the cost of the building, you get the cost of the property. Now, the cost of property itself stands at 1.969.9 billion. So, now, the cost of property itself is 1.96 and 9.9 billion. So now the question is, we want to see if that is the cost of property, how much did he sell it to his brother? Let us look at 2.3 billion. So now, if he sold it at 2.3 2.3 billion, meaning there is a gain on disposal. Because the cost of property was 1.9, then he's selling it at 2.3 billion. 2.3 billion. So the cost of the building, the figure is here. Then the disposal proceeds. The disposal proceeds. The disposal proceeds is 2.3 billion. So, if you get the cost of the building, you compare it with the disposal proceeds. So this one is point like that. This one, so no. What you get is a gain on disposal. This gain on disposal, it is where we subject 30%. 30% of the gain on disposal is what we remit as capital gains tax to right. So I think that one is sorted. Let us look at D. He was asking us the conditions, the circumstances under which a taxpayer is treated as having disposed of an asset. Now, I think there are very many circumstances. One, when a taxpayer has sold. When you sell an asset, that one is deemed as disposal. Two, you have exchanged it to someone. Maybe you gave it to someone, assuming you wanted the motor vehicle or land. Let's assume you wanted land and you had a motor vehicle. You can give your motor vehicle to someone and you get that land. So in that case, we assume that you have sold that motor vehicle. Then, two, maybe you have transferred it by way of gift. Assuming maybe you gave it to your wife or your girlfriend, or maybe you gave it to your boyfriend as a gift. For us in a taxation, we say that one is disposal. Then three, for example, if it is destroyed by fire, if destroyed by fire, in that case we say that it is disposal. Or if it is a motor vehicle and it has crashed in an accident, that one for us we deem it as disposal in taxation. So there are very many scenarios. I think you look at them. Then conditions. E2, circumstances under which no gain or loss on disposal of an asset is taken into an account when determining chargeable income. One, if it is transferred to a spouse. You gave a motor vehicle to your wife. In that case, we don't say that this gain on disposal must be included to the chargeable income for tax purposes, no. Or if it is a transfer of an asset between former spouses, in that case, no. Then three, an involuntary disposal. Maybe it has crashed an accident. Then the transmission of an asset to the trustee or beneficiary. Maybe an asset has been transferred to a beneficiary on the death of the taxpayer. Maybe a taxpayer had made a will and that maybe this asset will be given to someone after the death of the taxpayer. In that case, we don't include or we don't add back the gain on disposal for tax purposes. Then and others. So I think you look at that also. But the main emphasis was to show you how to compute the crypto gains tax for taxation purposes. Thank you so much for watching our videos. If you find that this video is useful, kindly hit the subscription button, but also share with your colleagues so that we can benefit as all. Subscribe for more. May God bless you.